All right, good evening, everyone. I'm Belinda Kelly, John Fitzgerald's assistant. Thanks for being with us tonight. Really appreciate it on this beautiful Wednesday night. So just first off, any questions at the end of the night, email me directly. I'm at belindak@jlf.com.au, and I can help you get a response straight from John himself if you've got any questions for him. All right, so tonight we've got a really exciting topic, talking about where we're at in the market cycle and why it's the most important time for real estate. All right, so let's sit back and relax and enjoy. All right, welcome, John.
Thanks, Belle. And thanks, everybody. Talking about the market cycle, you read something every day. There's a bubble, there's a boom, there's a bust. It's all happening, not happening, et cetera, affordability, all that sort of thing. I spend most of my time studying numbers on supply-demand. And today I actually was two meetings this morning with two of Australia's largest land developers. And I can promise you one thing. There is very much a shortage of land in Melbourne, Sydney and Brisbane. And in fact, Mark Steinhardt, the head of Stockland, came out and said there's a 3-year undersupply. Now, there's a couple of very interesting things going on. I'm going to talk about the actual numbers a little bit later. But what I think the takeaway theme for tonight, and I like to talk about, okay, what's happening in real estate, but then what's happening in your life as well, so that you can take away as much as you possibly can. And I love the saying, environment is stronger than willpower. Environment is stronger than willpower because, and I feel it's worth touching on because I was just thinking in the last couple of days how important it is to make little tweaks to our environment because we clutter ourselves. And like we have a spring clean every spring, so to speak, where we just clean out our wardrobes and unclutter ourselves. In a sense, we've got to do that with not only our finances, not only the way we organise our life, but the amount of things we have in our lives that we do that congest us. And I just want you to think about that. Environment is stronger than willpower. So how about just clearing the decks a little bit to give yourself some objectivity, but also give yourself a clear run at what's actually happening, not just in the market, but in your life to take advantage of what's going on. So write that down, environment stronger than willpower. What little changes can you make within your environment, your home environment, your social life, your work life, all those, just minor tweaks, and there's things that we should be doing every single day. And why it's important at this time in the cycle is because the cycle is skipping on an upward trajectory. So in 2000, and I'll talk in financial years, 2013, Australian real estate prices rose by 3.1%. In 2014, that was 10.1%. So it's increased at a factor of over 3. Now, that's a massive momentum. The main capital cities, though, Sydney, Melbourne and Brisbane, were all 15.4, 9.4 and 7% respectively. But you look at their trajectory, and it's all nearly doubled on the previous year. At the same time, we have a massive shortage of listings in those markets, so their listings have nearly halved. Now, they're the facts on the numbers, and here we have almost a runaway train in relation to the boom that's coming on. There's one thing that hasn't increased that's got everybody perplexed, and that's credit. The banks haven't been lending money. And everyone's scratching their head saying, well, that's really strange, isn't it? That, the markets are running. We've got massive sales volumes, that is volumes of houses being sold, but there's no credit increase. Why is that? 2 reasons. Number one, the people selling are baby boomers, and their houses are unencumbered. 80% of baby boomers own their own homes unencumbered. So that's number one. So they're selling and then they're buying, they're downsizing. So they're buying into a market, they're paying cash. They're not using credit. But number 2, we have 2 other buyer groups that are bigger than Australia's buying groups all put together. They're self-managed super funds and they're Chinese buyers. And in fact, Chinese buyers have been buying 39% of all new product in Sydney and Melbourne, and probably close to 30 to 40% in Brisbane as well. Now, these are absolutely new numbers. And when I say environment stronger than willpower, I get a lot of people think, oh, well, I'm just going to wait till the market happens, because technically that's, what would have been the history. But it's not in this environment, because we've got a new set of circumstances. The new set of circumstances are we've got baby boomers retiring, and 80% of those own their own homes, so they're paying cash, and we've got new buying groups into the market really fueling this market. And yes, we have an undersupply of land, particularly in Melbourne, Sydney and Brisbane. So where are we in the cycle? We're really just at year one of a 4 to 5 year cycle. But here's what generally happens. Year one, and when I say year one was last year, where we had Sydney do 15%, and that's really always the lead market, and from my perspective, the healthiest market to study. The median house price in Sydney now is $800,000. In 2011, it was $575,000, so it's jumped significantly. If the Sydney market continues its trajectory and repeats what it's done over the last 4 decades, it will hit around $1,050,000 by 2016. Now, that's 2 years from now, obviously. $1,050,000, where do I get that from? It will basically double from $520,000, which was its previous peak. What does that mean? Well, and are we sure that that's going to happen? Well, 2 points I'd make about that. First one is that there are 600 suburbs in Sydney, and already 170 of those 600 suburbs have a median house price of $1 million. So yes, and 43 of those hit that mark in the last 6 months. So yes, I think we're going to have a median of $1 million within the next 2 years easily. The second point I'd make as to whether it's going to continue on that rise of the trajectory is the number of listings in Sydney is less than half its previous peak. So it peaked at over 35,000 listings, and now it's well under 20,000. And that's inordinately low, even given the fact that we still have baby boomers trying to wash through the market. Now, if I look at previous booms, Sydney will start with a 10 to 15% for the first 2 years, and then the third or fourth year, it'll jump through 20%. And consecutively, those rates compound on themselves, and you get 4 years of that, and you hit up around 80, 90, 100+%, and particularly if it goes through 5 years. Melbourne is following. So the median house price in Melbourne today, around $620,000, but Melbourne market is extremely strong. It's sold over $9 billion at auction in the first 6 months of this year, and that is a record. In fact, that's 41% up on last year. Now, these numbers, they're just trajectories going up and up and up, and that's at auction. That's not considering the Chinese buyers buying all the new product there. And the Chinese buyers, that's a number in itself. They were buying around 550 properties a month. Now they're buying around 1,200 properties a month. And they're just discovering Australia. And I've said before, I'm actually going to China tomorrow. I've said before that when the Chinese discover Australia, and they're just discovering it, we will get a shock to our buying system that we've never seen before, because there's literally 10 million Chinese that could buy property in Australia. 10 million. Now, we sell 150,000, 200,000 houses a year. That's new houses. We sell about, call it $250 million worth of property a year. So when you talk about 10 million Chinese could potentially buy here, they're phenomenal numbers. And what is that 10 million? Where does that come from? Well, there's around about 100 million Chinese that travel abroad each year, and that's going to increase to 200 million in the next 7 years. Close to 1 million, probably in the next couple of years, 1 million of those people will come to Australia, and they're beginning to come to Australia. But a lot of them are buying without ever visiting Australia, and they're doing it to get their money out of China because their dollar is dropping, their yuan is actually dropping, and it's Australia is seen as very much a safe haven for them to invest in. So where are we at the cycle? We're at the start of the cycle, very much. What am I looking for? I'm looking for value. Anything I can buy sub 500,000 in Melbourne and Brisbane, and forget it in Sydney, but sub 600,000 in Sydney. We're looking to snap up as much as we possibly can. And we're having to buy land now 6 and 12 months in advance because of the shortage. And that's essentially what we do. We buy and develop land, and we're buying it 6 and 12 months in advance. And I've spent some time with Stockland recently, and they're forecasting 11% increase in their land prices in the next 6 months in some of the main capital areas. And that's significant. They're significant because if you get 11% growth in land, it'll be passed on to the house as well. So you get significant growth in your house and land prices. Now, where does it affect you building your property portfolio? Well, from my perspective, you look around today, particularly in Melbourne and Brisbane and so, okay, if I can buy a product there for $420,000, you could safely assume that that's going to go up by 10 to 20% in the next 12 to 15 months, 12 to 18 months. Now, with that growth, you want to be able to duplicate it, but it means then when you're duplicating, you're going to the market and you probably have to look, that is in 2015, at paying $500,000 for the next product. So think about this, you're paying $420 today, the next one you're paying $500 for, and then a year later you're going to potentially pay $600 because the market generally, when the cycle happens, it won't just tick along at 10 to 20% per annum, it'll actually increase and increase and increase. And the reason why it increases is because all the baby boomers will wash through the market. They sell out over a period of time. So you've got no desperate sellers, and you get what's called a seller's market where there's more buyers than sellers, and you get panic buying. Now, we've seen that. We saw that in 2003 dramatically. We saw it in Brisbane in 2007, interestingly, because they ran out of land there, not so much in the other states. And now we're seeing it in Sydney, where you see people camp out. We saw it last year in Perth, in some of the areas, because they ran out of land there because they had a major impetus of population growth because of the tail end of the mining boom. Not so much now. That's come off a little bit. But when you get panic buying, that's when you get the 20, 25, even 30% growth. Brisbane's seen 50% growth in its median house price in 1 year. And that's an amazing record, and that's on the tail of markets like Sydney and Melbourne. The numbers are very interesting to study. I'm happy to send you the empirical data on that. That is the median house price growth over the last 30, 40 years. To study it, by all means, ask me questions about it. We're at the start of the boom. Where will we end up? We'll end up about 2017, 2018, and I'm using history to forecast this, but my history has never had Chinese buyers or self-managed super funds, so I could be way out. 2017-18, median house price in Sydney will be circa $1,050,000. In Melbourne, the median house price will be conservatively $900,000 if Sydney hits $1,050,000, and Brisbane will be conservatively $800,000 if the median hits $1,050,000 in Sydney. Now, that's based on history, and it doesn't take into account Chinese buyers or self-managed super funds. So I look then and say, if those numbers are going to reach that amount, then where are we going to be? Where's the best place to buy now? The best place to buy now is where you can get the best bang for your buck, so to speak. The best bang for your buck, that is, utilize the least of your borrowing capacity, enabling you to duplicate as much as you possibly can. So that's why I like the bottom end of the market. If you can buy any product under $400,000, snap it up. Absolutely snap it up. Areas around Brisbane, you'll pick up today $420,000, and even areas around Melbourne, you'll still pick up $420,000. And remember, Melbourne gets 26% of all the immigration that comes into the country, and Brisbane gets the majority of the interstate migration. So two very high growth areas. Environments stronger than willpower. So two things for you to take away. We're at the start of the boom. So maybe have a little bit of a clean out of your environment, and that might be some of the some of the preconceived ideas you had about property over the last 3-4 years, about what people have been saying about property, et cetera, because I promise you the numbers are in. For the June 30, we had growth in all markets of Australia, 10% growth overall, but Brisbane, Sydney, Melbourne, 7, 9.4, 15.4. That's very strong. And now those markets are continuing with that strength and probably building up on that, because the 7% in Brisbane, that was principally just the last 6 months. It's growing at nearly 1% a month. So that'll be double digits if that continues in this financial year. And Sydney and Melbourne similarly will continue with their trajectory because their listings are down, their auction clearance rates are up, and their volumes are up. Yes, we've got baby boomers to wash through. That generally takes 2 years. So next year you'll see the real impetus of the boom and some panic buying. Waiting a year means you could cost you 15%. 15% in a market is $62,000, maybe $100,000 if you're in Sydney, that you could be buying now. So think about that, because you've got this window to build your portfolio. But as I said, the best way to clear the decks on that is to make some tweaks to your own environment so that you're clearer about it. If ever you want to ask me questions about this, the numbers, the history, the cycle, the buying groups, all of those sorts of things, by all means, email me. Have a fantastic night, everybody. It's an amazing time. And as I said, I'm going to China tomorrow. We've just done a joint venture with one of China's largest property companies, and they want to come in here and buy just thousands of properties. So what I'm talking about is things that I'm actually experiencing myself, where I've never actually seen it before. I don't know where it's going to take us, but I do know one thing. They find our property cheap, because it is, compared to Beijing, Shanghai and Guangzhou. Our property is cheap, particularly on a square metre rate. And in China, you can't buy land. So when we talk about freehold land, they say, wow, how long has this been going on for? Make the most of it is really what I say to everybody, and enjoy it. It's a great ride. It's a great journey. And if we can help you with anything at Custodian, build your portfolio, develop your portfolio, if I can coach you on it, because there's not many people in Australia, with as many properties as me, that can coach you on this sort of stuff, and particularly that studies the numbers. So if I can coach you on it, I'd be more than happy to. Have a great evening, everyone. Cheers. Thanks for